Hey everyone, so here's the recap of today's trade, 23rd of May, 2025. So 30-minute chart, the SPY gap down tremendously. These are the Avi levels, the burgundy lines, and I don't see any setup. When the market opened, it could come down to this level, ideally consolidate and go, or if it gets up to the next level further up, consolidate and then go. So there was nothing in it. It opened right in the middle approximately. There was nowhere to go, nowhere to trade, nothing to trade. Eventually did get up to this level about 1 p.m 12:30 or whatever it is. And what I like is that throughout the day these lows on the 30-minute chart are just getting higher and higher and higher. So that's encouraging, telling me that the buyers are just stepping up further and further and further. Got a bit of a flat top here in the last few candles, 30-minute candles. And sure enough, when I'm seeing all this activity down here, I'm getting ready for a breakout through the level. So on the 1-minute chart, once it gets into this area, that's where I'm getting interested. It hit the level, started messing around there. It put in this little wick over there. And as soon as it broke that little wick, that's my entry. And I did it with these 579 call options, which are expiring the next trading day. So not 0 DTE. That's that entry. And the stop was initially right down here, then tighten it up above that candle, and then fair enough, soon enough into the break-even zone, which is somewhere there as the thing moved. So that's the entry down here. Now, the target is up here. But I put these green lines in because, to begin with, this is such a wide range. This is massive. It's really unusual for the SPY to just go and moved already basically half of one big range and to continue moving the rest of the whole big range. It's unlikely. So this is just eyeballing it and saying that this is a long way to go. So let's go halfway. So 583. That's how I found that number. Halfway, I'm going to take off a lot of the profits right there. So that's a target. But then also just looking at the price action along the way, I noticed this area, 584.50, as massive resistance. So you can see right here, it hit itself on that level right there many, many, many times. It did a couple of false breakouts, even yesterday, false breakout. False breakout as it broke out, came back in. And even in the pre-market today, it hit itself over there. That's resistance. So I'm thinking, okay, it's going to get really wobbly up here if it gets up there. So I put a level there, area to de-risk on the way to the target. So the entry's down here and the target's up there. So massive room to run. But like I said, it's a big range. So halfway is, where you start taking it off and you find other areas of trouble to start taking it off. Anyways, I got into this, started to go. So right here, started to go. A pullback, no big deal, just hold through it. Made a higher high. That's encouraging to keep holding on. It's not reversing, even though this looks like a big old reverse hammer. It is a reverse hammer, but it's made a higher high. It's not a big double top reversal thing. And then it goes up, and in this area now it gets messy. Now what's up here around 581.60 or so is the previous day's low right there. Now typically I don't really worry about this. I knew about this level before I got into the trade, but I'm not too fussed about it. Figured it could break right through it and turn that into support. It's likely. But when it got here and it didn't do that, and it kept rejecting and it stayed rejecting for many minutes, more than 3 or 4 minutes, I don't know, however long this was. Also, while I'm in this position, look at what happened on the options chart. Look at that. It's all pixelated, right? So that's dangerous. That's telling me the liquidity is drying up. This is going to be a problem. The spread is terrible. It's in an area where it may become a problem. So this is where I'm starting to get really nervous about this and think, okay, it's time to de-risk. This is not a matter of taking profits. This is a matter of taking your risk off the market. You got risk on the market, take the risk off, put it back in your pocket. All right. So I'm watching this and I'm thinking, oh, this is really dangerous. So I start taking the partials right in this area. I take off something like 90% of the position, something like that, and lock in that P&L. But again, this is a matter of de-risking. This has not even got close to any of my targets, right? Sure enough, it rejected and it got that out a little better than break even that last little bit as it went down. So that's that. Now, so that trade's over, all good. Again, it's a successful trade P&L wise, but more importantly, it's a successful trade execution wise. Wait for the setup, put on the risk, and focus on risk management. Don't even think about profits. It's just risk management all the way. It was a matter of getting in, tightening the stop, and then de-risking it in this troublesome area. This is not profit. But even if the trade ended up as a loss, if I executed according to my rule book, that's fine. That's called a successful trade. And that's how you make money in the long term. Stick to your rule book, and you'll find that the losers are small, the winners are big, and then you have some in-between ones like this. Hope you'll enjoy this video, and I'll talk to you soon. Take it easy.